Good day, good afternoon, good morning, wherever you are watching, my people. Thank you for joining us once again. This is your channel, Yellow World, and as usual, I'm your host, Bossman. I hope you guys are doing good. We have another session today, and I'm excited to bring this to you. I know these are some of the questions you've had in your mind. Questions you've been thinking of that we feel that we can address, very well today. And, I have another special guest with me who will be taking us through this. And I must tell you that even though I don't want to market people on this program, but, she's someone who, at least I choose something at her, that many people couldn't do, and she did it. So she's highly recommended, if I should put it in that way. But as we always do, we turn to our guests to introduce ourselves. So can we meet you?
Thank you so much, Bossman. I'm so excited to be here this morning. It's my pleasure. I'm Habeebat Allimson, a mortgage consultant with Dominion Lending Center. To talk about a few things I do. I am into purchasing, renewal, refinancing, and now I'm a bit going towards commercial mortgage as well.
Wow, that's interesting. I must say that she's doing it well. So if you if you really need something in that area, please reach out to her. And like I always say, you can also reach out to me. We'll definitely connect you with her. So how long have you been in Canada, and how has it been living in this part of the world?
Canada. My family and I came to Winnipeg 2011. It's going to be almost 10 years, just like yesterday.
Wow. And
to be honest, it has been like up and down, but by the time you know what you're doing and what you want to do, so you just focus on your goals and objectives. It's not been that, but at least with the help of God, we've been pushing through.
That's good. I'm happy. And if you look at, you've been here for like 10 years, you've seen people coming, you've also experienced a lot. I know you are also well respected in the community and your family as well. My next question is, how do you think people can start well when they come to Canada?
Starting right, what I usually think, and I believe to me, starting right is just, what do you want to do? It's all about you. You're the driver of yourself. When you're here, you're going to hear so many advice from different people. So it now depends on you. Like your IT student will say, put some in the parking lot if it's going to work for you. Just keep it aside. Put some in the garbage and even act on some immediately. So it's better if it depends on you, because you know what is best for you. You know where you want to be. You know the goals. You know your passion. So follow your dreams and passion, and before you know it, you just believe that, I'm starting it right the way I wanted it. It might be a little bit tough and rough. Yes, everybody's going to go through all that. But just make sure that, I'm following my dreams. I know my passion. I know this is what I want, not what people want. What I want, and it's best for my family as well. So it depends on that person. Because if I said, you can do this, and it doesn't work for you, you can't say because Habeebat said this, I have to follow her. Put it in the parking lot if it's going to work for you in the future, or put it aside, or just take it out. Say this doesn't fit into what I'm saying. So don't limit yourself. Think of where you're coming from, what you're doing, and what you love doing, and go from there.
Wow. That's a good one, and I totally agree. I like that word. Don't limit yourself. Coming into a new environment, sometimes we listen to people. And what they say and the limits they place on us. I was speaking with someone yesterday. He said he actually applied to a place, and they said he shouldn't normally say that he wants a particular thing. So he called the HR and said, I want this. And when he told his friend, the friend said, why did you say that? They will never call you back. That's the end of it, But after like a day or two, they call and said they actually offered that particular thing and other things and more than that. So don't put a limit based on what people say.
Exactly. Yes.
Okay. So we'll dive a bit into your field, and I know you love the field so much. So we want to know how you got into being a mortgage specialist, and what was the motivation?
Oh, that's a good question. I love that question a lot, because looking at me, you think, oh, maybe she's this, she's that. I'm a handy woman, to be honest. I love to do anything to pertain to the house, anything, painting. So I have my tools at home.
Wow. And I can attest to that, because the first time I came to your house and I see how everything was set up, I said, wow.
So I was supposed to go into interior designing, but probably maybe I didn't have the right direction, or maybe, I don't know, but I loved colors and putting things together. So I see myself in home. And there is this, one of my boss, he's the one that introduced me into mortgage industry, real estate industry. His name is Sonny Jazal. And maybe I didn't see, probably he saw that I have some potentials. And he just threw it to me and said, Habeebat, do you want to be a mortgage specialist? And I said, what? I said, I wasn't even thinking. I said, how am I going to do it? Who am I going to sell my product to, my service to? I don't know. And he said, I know that you can do well in this field, that you have everything. That is why I'm calling you into the industry. So it's kind of my motivator, because I didn't even see myself in it. Because I didn't mean I do, I would have said, okay, this is how I'm going to put it through. But at the first, I didn't see myself I didn't even think about it. Don't let me say it. I didn't think about it that I can do this. But he saw it and he said, you know what, go in for this and you'll be fine. To be honest, I kept praying for him.
Wow.
Because he now pulled me out of my shell and said, this is it. Wow. So he's a great boss.
Wow.
Yeah. So he's the one that put me into the industry. He's an Indian guy. Yes.
Wow.
He's an Indian guy. So I always say, yes, I give it to him. Anytime I have a cause to say something about it, I always mention his name.
Wow.
Yeah.
Interesting. And what's the name again?
Sonny Jazal.
Oh, so I think I've seen the name in a couple of places.
Oh, yes. Oh, yes.
Yeah. So, I mean, thanks, Sonny. Like I always say, anyone that we're always looking for people and thinking of people that will always lead us to what we want to do. We don't live just for ourselves alone, but to help others to fulfill their dreams and their purpose. So thanks to Joe.
When we got our property, it was actually the realtor that helped us get in the mortgage. So and he said I got him a link into Nigerian community.
Oh, wow.
So through that, he said, oh, I know Nigerian community through Habeebat. Because I always tell him, because one thing I love in him, and this field is about honesty. He's just an open-minded person. And if you are, you go far.
Exactly.
So that is it.
Wow. That's good. Thank you for that.
Welcome.
So will you consider being a mortgage specialist, rewarding?
Oh yes, in every area of it. In terms of the commission, in terms of the testimonials, in terms of the referrals, it was rewarding.
Okay.
Because if you render a service to someone and that person can refer like 5% to you, then that is more money. It depends on how you treated the first person that matters.
Right.
So first one can lead you to 20. Like I talked about Sony. One can lead you to many. So your first person matters most. And sometimes I do tell people it's not, everybody is in the industry to make money. Right. Yes. But sometimes it's not about money. but it's about good relationship, because you want it not for today but for tomorrow. So it's very rewarding in every area, I must confess.
Wow.
So, and I love it, and I'm enjoying it, and I'm in it. Yeah.
Wow. I think I can see that from the way you, maybe you'll be tempting some of us to come in.
Yes. I even actually introduced a lady, a friend of mine, into the industry, and she has a license already.
Oh, wow.
And she's a Nigerian, and I said, go for it. I won't, just because it's just, I don't want it to be just me.
Wow.
I want it to be, if I can help, I'll just do it and you go.
Exactly.
So it's about what can you bring up, not just me alone.
Yeah.
Mm-hmm.
And I'm sure that we need a lot of that in our community.
Right.
I see quite a number of community coming together, doing great things,
Right.
And I think if we can do more of that in our community
Right.
as well, we can take ourselves to.
Yeah, right.
That's great. Okay, so I know you've talk a little bit about, what you do. Can you elaborate on, what you do?
Okay.
Tell us more.
Okay, like I've said earlier, I'm into purchasing, refinancing, renewal, and a bit of commercial.
Mm-hmm.
When I said purchasing, maybe like first time home buyer. If you want to buy, maybe first time home buyer, maybe second home, maybe rental, things like that. So for that, you have to do an application. You have to fill an application up, check your credit. By the time you check your credit, see what you can afford, because before you can go to a real estate agent for viewing, they want to see how much you are actually pre-approved for.
Okay.
So that is going to be like a guide that, okay, you're approved for 300,000, for example. All right, that is, if you see a mortgage that is around 310, then you know that your pre-approval says 3,000, but you like a mortgage of property of 310. Then the 10,000 on it, you are going to come up with it. So it now depends on you. You can buy something lower than your pre-approval, that is fine.
Okay.
So for your renewal, if your time, 5 years term, 3 years term, if your time is going to an end, you have to renew again, because you have the length of 25 years amortization.
Okay.
So with that, your renewal, you renew after 5 years, or if you do a time of 3 years, you renew after your 3 years term. Then, not the interest rate that you have at that time, you have to, another interest rate is coming up, because you don't know what the situation of interest rate is at that time. So Bank of Canada determines everything when it comes to the interest rate. Then refinancing, maybe you want to take some money out, you want to do this, then you refinance your mortgage again. So those are the things like that. Then looking at the aspect of a commercial mortgage, maybe you want to buy your studio, maybe you want to buy your maybe auto shop, workshop, maybe church, maybe mosque, things like that. It's a huge project when it comes to commercial. So I'm just like in everything, and but to be honest, it's a huge topic when you say, okay, what do you do? Purchase them. If I have someone that wants to buy, what I do is I educate them on what they need to know. Because if you don't educate them, I'm not the one that is going to be paying the mortgage.
Right.
They are the one paying the mortgage. Why would I push it to you and said, okay, buy this because I know you can afford 420? Then I said, okay, maybe talk to the director and said, no, she has to buy something like this. No, because I am the one-time commission and I'm off. But you are going to be in that payment for like 5 years or 25 years amortization. So I have to tell you what you need to know when you're doing your mortgage application. Your credit, people are like, oh, my credit, what happened? I didn't owe anything. Yes, but by the time I pull an Equifax will tell me everything I need to know when it comes to your credit. And a lender will look at it and say, oh, 680 is a good score when you're looking at a credit score for mortgage application. 680, their thumbs up, they're happy. But anything lower, yes, they can do it, but we'll have a one way or the other too. But the best one is 680. So, and people sometimes you're looking at credit score. What is your credit score like? It's how it's just basically your prepayment history. How do you pay back all your loans? Do you pay back on time? 30, 60, 90 days? Do you? But if yes, then you see it growing. And the beauty part of using a mortgage broker like myself is, if I want to pull your credit, I'll pull your credit once. But if you go to different lenders, maybe CIBC, Scotia, all those lenders, they pull your credit the moment you go there. And guess what happened? It reduces your credit score. But brokers work, I work with different lenders. Many lenders that you don't even know about.
Wow.
So it's not just, we have A lenders, we have alternative lenders that we work with. So these are the things that, okay, all your application, I know if I see an application now, I know where it's going to go. And I will explain to you, I'll tell you that this is what it is. If I'm sending it to an A lender, I'll tell you, you pay me nothing. If I'm sending to alternative lender, then I'll say you pay 1% of whatever, right? But people will just like, I'm going to pay again. So, not because you didn't fit in to an A lender deal. But in order for this to work, then you'll be able to, this is going to work, but this is what is going to happen. Some people will say, yes, I'm in. Some will say, no. Okay, it's up to you what you want to do. So those are the guidelines to give when they are looking to buy. But renewal is just your terms renew. The financing takes money out, and maybe you want to pay down your loan and things like that, and they recalculate it again. And basically that's it. It's a huge topic though. But so that's why I said if I have a client, I'll tell you what you need to do.
Okay.
Yeah.
Wow, that sounds interesting. I know it's quite broad, and individual situation will be different from other individual. You mentioned something about not fitting into A lender, going to B lender. Even though I've been in the financial industry for a while, but the first time I heard that statement, it was, I understood what an A lender or B lender could be, but the reason why one will fit into one and you won't fit into one, what could be the difference?
Okay, when you're looking at the A lender or alternative lender, A lender wants a straight deal. In the sense that you want your full-time, you want permanent, part-time, permanent. If they want part-time, they want 2 years history of your part-time. If you're doing casual, they want 2 years history of your casual. If you're doing seasonal job, they want 2 years of that seasonal job.
Wow.
So those are the things. But alternative lender will look at it all the way around and say, okay, we can look into this like this. Okay, maybe your credit score. So many things that affect it that you move it to alternative lenders. So in order for the deal to work, because you didn't fit into this because of some of the criteria that, you have to have this, and that. So if you don't have this, then we move it to where you can get approved. So not that you won't get approved, because some people say, but I'm working. I have 2 full-time jobs. 2 full-time jobs, lender is going to tell you is not realistic. But the only time that is realistic is when you're 2 years in that full-time job. Then they believe that yes, so you can do it. But if you just got 2 full-time jobs, maybe 3 months, less than a year, can you? Maybe you can break down along the line. So those are the things that we do check in order to know that, okay, this is where your file is going to go. And this is where it's going to go as well. Okay.
Okay. So because we do this also for people who are looking to come into Canada, or people that are preparing to come, my next question will be, I know when people are coming, there are a lot of things they want to wrap around their heads. But do you think someone who is planning to come to Canada, or maybe has finished his processes, moving over, can they start thinking of planning for their mortgage?
I would say yes and no.
Okay.
If there's some certain countries that they want to see maybe your credit check from where you're coming from. From Nigeria, we don't do any credit check. So with the person coming from Africa, they will be like, okay, stay 6 months.
Okay.
You have to wait. They want you to settle down. Get a job. Even though you have 20% down, get a job and settle down for like 6 months. 6 months, insurers. Why we can't jump into it? Because we have some insurers. Gen what? CMAC, they will ask for, they have their requirements. They will say, okay, new to Canada, they're under New to Canada program. New to Canada program, you have 6 months history of your rental payment. 6 months of your utility bills, maybe sure, your telephone, they want 6 months. But you're putting down 10%.
Oh, I see.
But if you now say, oh, I don't have 10%, I have 5%, then you have to wait. You wait for like 12 months. You have 12-month history of your rental and 12-month history of your utilities, and you put 5% down. So those are there. They just want to know, even if you're putting 50% down, they want to see, how are you going to pay back? Have you settled? Do you get a job? So settle down, get a job. After 6 months, the 7th month, start planning for your mortgage if you have the 10% down. But if you don't have, wait for 12 months, you get a job, because no lender wants to see that you don't have income. And good, they have their PR. If they are non-resident, they won't be able to, because there's nothing to show for it here. They make nothing, because we're going to need pay stubs. So they need letter of employment. So do they have here non-resident? Non-resident can come, a mortgage of 300, put 300 down. You're just going to go exchange with the buyer and the bank. That's it. Cash down, right? So, but if you don't, so it's good. You can wait, settle down, do every necessary things to do, and get a job. So after that, then 6 months you are good to go. 12 months you are good to go. Yeah.
That's right. Well, that's good. Okay. All right. So my next question will be, something close. But,
Okay.
It has to do with tips and tricks of buying a house. From your perspective as a mortgage specialist. What things I can look at. As per getting a mortgage. And I understand that sometimes I know I've interviewed people that they will tell me that, see, I won't tell you all my tips and all the tricks because I don't want to take it this way. So can you share some of those? I'll
just share the basic, which you write, because I wouldn't want to just be like open.
I know.
But I'll tell you the some tips that you need to be aware of. The first thing is, which I like to sell, it's what I call accelerated biweekly payment. I love that because everybody wants to get out of debt on time.
Right.
When you do accelerated biweekly payment, it's actually, you put some certain amount in your principal.
Okay.
Like, mortgage of 300,000, for example. You're putting 5% down, which is 15,000. And guess what? You think that your loan is going to be 285. But remember, you have to pay CMAC that goes underneath as well. So your loan amount is like 296, 400 thereabout. And your monthly payment, maybe 580 thereabout, or 600 or 7 something. So you put a certain amount, there's a way they calculate it, maybe like $50 extra into your bi-weekly payment. But the $50 is not going to go to your interest. It's going to go to your principal. Guess what happened? It's going to drop your amortization down.
Wow.
I'll tell you, I love to, my example, because before I even into real estate, there was a time there's a difference in our interest rate of $6. And our financial advisor doctor just called us and said, "Oh, Allimsons, come, we need to make an amendment because this. $6 dropped our amortization by 4 months."
Wow.
So not to talk of if you now put $20 or $50 extra. So definitely amortization of 25 years can drop down to maybe 15, 16 or thereabout. So I love that because most people will just be like, I don't know anything about it. So those are one of my tips I saw, that do this if you have extra. And again, if one income can pay a mortgage, then you're perfectly okay. I love vacation. So do go, but the other income will go, just have vacation, right? And again, another thing is the tip is your bank statement. That is another very, very important document when you're doing a mortgage application. When you send me your bank statement, what I'm going to check in there, I'm going to check your deposit. I don't need it to do anything on your withdrawals. No, your deposit. If you have 2,000 more at a time in your deposit, I'll ask for the source of that 2,000. If you just do deposit, where did you get it? Lenders doesn't want you to borrow. Lender want it to be your own resources. Some people will do e-transfer. I said e-transfer, it's a third party. So if you are using that e-transfer part of your down payment, then it's definitely shows that it's a borrowed money.
Oh, I see.
So always be careful with your bank statement, because it's very, very important document. They look at it. If I told a client of mine and said, okay, you have the 3,000, he said, oh, a friend just deposited it into my account, but I said it's not your own, and we are doing an application, but it's not your own. Yeah, he said I should just keep it. I said take it out. Don't take it out 2,000, 1,000. No, even though it's 3,000, take the chunk of 3,000 and take it out.
Wow.
Because so that it won't show that this is. So you need to be careful what you put in your account when the time is right for your mortgage application, because those are the things. It's stressful. Application is very stressful. I know you've been into it, and you know how it is.
Yeah.
So some will be like, oh my goodness, this is stressful, and some. I did one application. I told her, I said, always pray for me when when I want to do your. Just pray. I'll come and meet you. And the application just went boom in a week.
Wow.
It's just like that.
Wow.
And I said, you know what? Just always. I want all my clients to that time, the right time has come. So those are the things that you need to know. And again, your credit score is very important. Everything can in your face at no time, because if you don't know anything about credit, I don't check my credit. I check the one on maybe Scotia or all these have. It's different from Equifax, right? And once in 6 months, I do check my credit. I want to see where I am. Most people won't know, most especially when you have a problem with your phone bills. It's very, very important. Before you know it, collection. So, and you wouldn't want to. There's somebody that $7 and everything just went boom. You know, you have to be very careful. Make sure you do your payment. When it's due, just pay. Even before it's due, pay it. And again, when you're looking on your credit card, what do they expect you to spend on your credit card? You have a credit card of $1,000. You are expected to spend 25% of that 1,000, not 90%.
Wow.
So they expect you to leave 75 on that card, and you like 25. Play with 25, they are okay. So that's some of the things that you need to just try when it comes to your credit cards, your phone bills, and things like that. It's very, very important. You might not need it now, but by the time you just be like, I don't know anything about it. But you didn't put in when they are sending you letters, you didn't act on it. So those are some of the tricks I will just and tips I'll say.
Yeah, and those are great, you know, because knowledge is power.
Yeah.
And I can say that even for me, that like I said, I've been in financial industry, you know, there are two tips that you gave that you know, I would say that, I mean, one of them is not very new, but the way you presented it, and that's the accelerated bi-weekly payments. It looks like something that I may want to consider as well. And on the bank statement, I was still chatting with a friend few days back, and I mean, the way you explain why they can decline based on deposit and all those things also make a lot of sense, which is something we need to look at as well. I know this has been great. Thank you, for your time. We'll take a short break.
Okay.
We want you guys to stay right there. Don't change your dial. If you are watching us for the first time, don't forget to subscribe to the channel and turn on the notification button so that you don't miss any of our videos. So stay with us. We'll be right back. Welcome back, guys. Thank you for staying with us. We've been going through a lot about your mortgage, what you need to look out for, the tips and tricks. We have a special guest who has been diving deep into it, and I'm sure you have been enjoying it. So if you are watching us for the first time, this is your channel Yellow Word, and I'm your host, Bossman. So we turn back to my guest and say thank you once again for coming here and the tips that you've been giving us. We'll go right back into it, and we'll start with what we call, I know you have something that you call 10 commandments of buying a home. I don't know if we can go through it, and for the viewers, we'll put it on the screen so you can also follow as our guests, talk about it.
Okay, I like the 10 commandments of buying, because it helps you when you're looking at to buy your property. Because the first one is, you should not even change your job when you're doing a mortgage application. Don't quit your job. Stay with your job. Don't say, oh, I want to start working as a self-employed. No, at that point, keep what you have. So don't even quit your job. Stay on that job. Don't change your job. Maybe even if you see something more better, but maybe you want to now say, okay, I will wait, and by the time, because this pays more and I've been offered an employment, maybe I'll wait after 3 months, then I can go further from there. But if you didn't see any prospect in it, just leave it and let's finish the application, and that's it. Then a car. Most people buy car. It's better to do your mortgage before you get a car loan, because that is a huge loan when you come into pre-approval. It can drop it down by 100,000. So get your property, then get a car loan. So that is way much better than that. Then, like we said, your credit card is very important. The way you use your credit card, don't use over the limit. I've seen people using over the limit. Don't use over the limit. Just stay with your 25/75. Have that at the back of your mind. And if you spend it all, make sure that you put it back. You have a means of putting it back on time so that it won't get into you. Then people will just be like, oh, I'm searching for a house. I want to buy furniture. Don't buy furniture. Don't do anything loan when you're doing your mortgage application. Don't go to bricks and say, oh, because my mortgage application is almost ending, I need to get something, appliances and furniture. Yes, you're right, but do it after you have your keys. So it's much better than that. And stop paying by the time. Then large deposit. I talked about large deposit. Be very careful about large deposit. Be very, very careful. And again, don't change your bank account, because you've been saving all those. Don't now say, oh, I want to do this. You can change it. You can change your bank account, but they want to see how you're making that payment. How have you been putting it, saving it, and knowing it? And again, the transfer. If you transfer, don't transfer from account to account, because by the time you transfer from A account or RBC account, they want to see every account. So in order for us to make it like a reasonable and not too clumsy, it's better for you to have an account that you've been saving all through. Then stop paying your rent. Right, you should not stop paying your rent because you want to do a mortgage. You now said, oh, I will stop paying my rent. No, why would you say you want to stop paying your rent? You shall not stop paying your rent. keep paying you your rent. So in order for you, by that time, you will have gone through your application. So those are the commandments of, then your liabilities is very, very important. Don't owe any debt. Be careful of those debts. If you have debt, yes, you definitely, I know people who go to school, they have student loan, and there are some time that they are not yet ready. They've not started paying. But if you know that this is how much you are paying, pay it on time. Don't owe anything. So with that, then you know you're good to go. You've already done all the commandments that needs to be done. So basically, that's how the 10 commandments work.
Wow, that's interesting. We should just, put it somewhere.
Yes.
Read it every time so that we don't break any of the commandments. That's awesome.
And I really like the word 10 commandments. I say, oh yes.
Yeah. Or maybe we should even memorize it. Okay, that's good. Okay, but my next one would be for this one, so we'll put it on the screen for people to see, which has to do with renting versus buying. I've seen a lot of questions and discussions around that.
Renting versus buying, it depends on you. The first thing is, I won't push you to go and buy, but I will tell you if you're ready, because there's always a point that you know that, yes, I'm ready to do this. If you don't have your down payment, closing costs, stay in your rental place and save. So that will, because you won't be paying property taxes, you won't be paying some other bills. So it's better for you to stay there and rent. And again, in buying, why I like buying again is you build your equity, because definitely you have to build equity. But for renting, you're building the landlord's wealth. So you're helping the landlord to pay the mortgage, not your own. So, and again, your monthly payment, again, another one is your monthly payment is being locked in, because you have your interest rate for buying. This month you are paying this. But in terms of rental, they increase. I sat with a client, and she was telling me they're going to increase our rent very soon. So for the period of 5 years, imagine how much they will have increased during that time. But if you're buying, definitely you have to stay in this amount because you've locked it in for 5 years. So there's no need of increasing or whatever. And again, you're free to put anything, customize your house. When you buy, you customize your house the way you wanted it to be.
True.
Wallpaper, you hang anything, you make it perfect that this is how I want my house to be. But in a rental place, no, you can't even knock. You have to, even when you live in that place, make sure everything back to normal, right? But there's nothing you can do. It's not your home, and you can't do it the way, even though it's your home, but it's not still your home.
True.
So you can't do it the way you wanted it. And again, your down payment, you own your down payment and closing costs when you're buying. It's your own, right? Because you save for it and you put it down when you doing that. But rent is not your own. Some fees like car park is not your own, right? Security deposit, you think is your own, but by the time you're leaving, and they'll tell you, oh, this bulb, you have to pay for it. Oh, this floor, you have to pay for it. So some of the things that you have to pay when you're renting. And again, who does the repairs? Yeah, I know you have a home, you do your repair yourself. That is another thing when you're buying. Your repair is on you. So, but in terms of you renting, your repair is not on you. So you just call them and they will come fix it, and but those are the things and guidelines that it now depends on you. Do I want to stay in this rental apartment, or do I want to buy? So you sit with your family, think about it, then you go from there. So it's not about anybody forcing, it's your choice. Because you are the one paying, even renting and buying, you're the one paying the bills.
That's awesome.
Yeah.
I like that. Okay. So my next question will be around, based on your experience, working in this field, what do you think some of the biggest challenges that people are facing and how they can overcome it, especially when it comes to getting their mortgage approved?
One thing I'm going to say about the challenges is it's about people. It's about, because if you have so many people you're listening to when you're doing your mortgage application, it's kind of like a risk. Because you hear from this, you hear from that, you hear from this, and you're in the middle. You wouldn't know what to do. So it's better to go and see a professional and trust in that person that, okay, you're in it and you can do this. Because every application differs. You and I might be working on the same field, earning the same money. Do I know your liabilities? No. Do I know what you're putting down? No. Do you know mine? No. So each application differs. You and your friend is totally different. Your child tax credit might be lower than mine, and you wouldn't expect you to be qualified on the same ground. So without challenges, people need to understand that you need to talk to a professional when it comes to your mortgage application. I didn't say you should not listen to other people's advice, no, but just talk to someone who knows what he or she is doing, so that you wouldn't have any challenges. I like I told you, I had a client 1 week all done. In fact, she was just like, whoa, this is just like, what, are you sure? Second day, I got an offer to purchase. Second day, it got approved. And she was like, is this how simple it is? And I said, no, because you gave me what I wanted. Every document you sent it in. Every document, you know what to send at the right time. So, but it hadn't been, she has been telling different friends, family, colleagues, and then it's kind of a messy thing. But we don't want that, and you don't want it to be stressful, because it's stressful already. So those are the things, that is the major challenge I can see, that you need not to do this, but you just have to talk to a professional to guide you through.
Well, and I totally agree that that's a big thing. I always say that a lot of time when we go to see doctors, they will give us, prescription or give us advice. Most of the time we won't call friends and family members and ask, but when it comes to our finance, they would, but because maybe we have what we want to do in our mind, we'll be looking for someone that will confirm, and talking to people who are not professional in that field. So I totally agree. It's something that we need to be careful of. Now, I know there's a time that there's no way you do mortgage that, professional specialists like you won't talk about GDS, TDS. And some people is like, what Latin, or I said, give me my approval.
I know.
Okay,
I know.
So what does this mean, and what impact does it have on a mortgage?
Okay, I usually tell people, I said, the heart. When it comes to the heart, that's GDS, TDS is the heart of every application.
Wow.
GDS is gross debt service. And how do we calculate our gross debt service? It's our principal, our interest, our property tax, and our EAT all over our gross annual income. So that, and there is what is it called? A guideline to follow when looking at GDS. The the insurers will say 35%, 38% for our GDS. If it's more than 38%, if we are doing the calculation, put in your numbers, and it's more than 38%, then you have to drop it down. And TDS, I'll explain a bit what. TDS is the total debt service. And how do you calculate total debt service? Your principal, your interest, your property tax, your HEAT, and other liabilities. And what are the other liabilities? We have your car loan, we have your credit card, we have your line of credit, you have your student loan. Every loan is under liabilities, right? And it's over your gross annual income. Right. So, and the insurer said this TDS must be 44%. So when you're doing an application, put in their income, put in the child tax. What is the family income like? Oh, family income of 75,000 per annum, or both husband and wife, 75,000 for example. Yes, they might be looking at a mortgage of maybe 350, but it depends on their liability. If they have more, car loan, every loan, blah blah blah, then they won't be able to qualify for 350. It will drop, because we always look at what is my GDS. If you sending a document or inquiry to a lender, the first thing they will ask, what is loan to value. Loan to value, that is how many percentage are they putting down. Okay, 5%, 95 loan to value. Okay, what is their GDS TDS like? If it's more than 3844, I won't even send it to them, because it's way more than the requirement, right? And if you could, I don't know whether you know, CMAC dropped down. They came up with July 1st that there was an adjustment in their GDS TDS. Now they reduced it from 38 to 35, and from 44 to 42. So a person that is being qualified for 300,000, it's going to be lower, because 3542 is lower. So by the time you're sending it, maybe that person will qualify for maybe 270. Not too pretty sure, but maybe something around, because the GDS CDS is lower. You qualify at 3844, and now but other insurance, the good thing is we have other insurance. We have Genworth and we have Canada Guarantee. They says, oh, you know what? They don't want to go with CMAC. They want to still be on the 3844, which we can send an application to. So whenever you're looking at GDS TDS, it's what makes up what your pre-approval is. So it's a very strong thing. They want to see your income, they want to see your liability, put everything together, match it, and does it come up to these numbers? Yes. If we get something lower, then your pre-approval is coming up. So if it's around 3240, then I can say, oh, good, you qualify for maybe 350. So we always have the guidelines of that 3844 or 3542. So it now depends.
Awesome. A lot to learn.
A lot. I know.
Okay. We hear things like conventional and non-conventional mortgage as well. Okay. I don't know if you can shed more light on their advantage and disadvantage to being in one or the other.
Okay. We have what we call conventional and high ratio. Right. High ratio is when you put 5%, 10%, 15%, 19.99, less than 20%.
Okay.
That is high ratio. And any high ratio, you are bound to pay the insurance, right? Default insurance, that is CMAC. So a mortgage of 300,000, you're putting 5% down. Your CMAC will be 11,400. So 11,400, they won't ask you to pay, but they'll put it back on your loan. So now people will just be like, well, I thought I would be paying, there's this coin, so funny. But he has been like, oh, my loan is going to be 350. I said, sir, it's not 350. It's way more than 350. That is this, because CMAC is going to be added into your loan. So that goes from 385 to 396,400. So because you are putting below 20%. So when you are doing 20% above 20%, you're not going to pay CMAC conventional. You're not going to pay CMAC. But the difference again is the interest rate for your high ratio is different from your conventional. Maybe high ratio is 2.04. Maybe conventional can be like 2.2 or 2.3 or thereabout. So it's way different. It's not the same rate. But if they then gain here, if they lose here, they gain here. They know how it's been done. So those are the things that if you put, it's advisable, if you save up, put 20% down. It's not easy, yes, I know. But the beauty part is put 20% down so that you cut off the, what is it called? You cut off the CMAC. Because if you're looking at a mortgage of 300,000 and you're putting 20% down, that is 60,000. what you want to finance it, just 240.
Mm.
So what you're going to pay, then it's going to lower compared to you on the 296 400.
Mm.
So that is just how the difference when it comes to iRatio and conventional.
Mm. Okay, that's good. Well, I know there have been a little bit about talk on CMHC, GEM wards. What exactly are those?
They are they are insurance. That anything you have to do, like default insurance, you have to pay. And again, when they are doing a mortgage application, if you send to a lender, they have to send it to them for approval.
Mm.
So it's not just that, oh, I send it to TD, for example. TD is going to send it, look at it, oh, we can do this, but then they'll send it over to the, if it's 5 less than 20%, they will send it to GenWatt, or they will send it to CMSC for approval.
Mm.
They will review and say that, okay, this, we can do this, but this is the amount they're going to pay for CMSC. So CMSC is Canada Mortgage Housing Corporation. So put it in, send it, default insurance, okay, we are good, then they approve.
Mm.
Then that is when we are sending the letter to you, oh, it has been approved.
Okay.
So if they don't approve, they decline, there's nothing. We can send it to GenWatt, but it's more or less the same thing. It's just a different name. They will, if they didn't approve, why didn't they approve? They might not approve based on, maybe the child tax credit is way more than the income, because sometimes they will look at, they have a percentage for child tax credit. So, but hardly they decline, but if they decline, they will just be like, what happened that it's been declined? Then, oh, they want us to pay 10%. Do you have 10%? Oh, I don't have 10%. So there, one or two things, but they are all default insurance agencies. So yeah.
Okay, that's good. Well, we're getting towards the end of our discussion, but I also want us to talk a bit about, if you can elaborate on the concept of down payments.
Oh, down payment.
Yeah.
Down payment. What you can do your down payment to, like, 3 things that you can make up your down payment. It's either you start saving, saving your savings. You can use your TSFA, save into it. You can use your RRSP.
Okay.
First time mobile, you can use your RRSP, save into it. The major thing about the down payment is just save. And you cannot use your line of credit as a down payment.
Mm.
Save, they want it to be, because line of credit is, or it's loan already.
Mm.
So it's loan versus loan. You want to take loan for loan. They don't take loan for loan. But you have to save. They want it to be own resources. And you show them the movement of that savings. So with down payment, I just advise, give yourself target, maybe a year or 2. Be in a rental place. A year or 2, save, save, save. And by the time you see it, you now, and closing cost, because you have your down payment and closing cost. Number, closing cost is done through the lawyer. By the time you're done, and the lawyer for closing, sometimes around, I usually put 2%, but sometimes lawyer would just be like, it's 1%. Well, I do tell my client 2%. Why? Because if in case anything happens, they still have money. So nobody's going to take it from your account. It's your money. Put 2% closing. So then you know that, okay, I'm okay when it comes to whatever I need to put into as closing and down payment. But you need to save up your down payment. And again, there's something we call the gift. Gift letter for down payment. Gift is basically, maybe it's not outside, it's your immediate family. Maybe your mom, your dad, your parent, your sisters, right, your brothers. So it's not just an uncle that came from and said, okay, this, but that they can do a gift letter and said, okay, my mom gave me this, my brother gave me this. We've seen it.
Can it come from a cousin?
Immediate family.
Okay.
Yes. Yes. So they want it immediate family, so that this is a gift. Because why? They believe that for a gift you won't take it back. Cousin will take it back, right?
I know.
Yeah. So friends will take it back.
Sure.
Right. Hands will take it back. We just it's just a loan for a while. They don't want something that you take back. Just
Okay.
give and give it as a gift. So we now do, whosoever that is given a gift will have to fill a form, sign, and initiate that I'm giving this as a gift.
Oh, wow.
Yeah.
That's awesome. Okay, finally I will ask if you have any last words or, comments you want to tell our viewers.
Oh, thank you for watching actually, but one thing I just want to say is always be yourself in everything you want to do. You can try as much as possible. It might be rough at the beginning, but when you try and put in your very best at something, to be honest, I see myself as an example that I first of all look at myself. Can I do this? How am I going to sell myself? Where am I going to see myself in the next boat? But I have that dream that yes, this I want to do it, and I want to just see the end of it. It got to a point last year, and I was like, I think I'm done.
Wow.
But and I said, no, but I love doing this and I enjoy doing this. Why do I want to stop now? Keep pushing.
Wow.
It will come.
Wow, this has been a great time. Thank you, Mrs. Allimson, for joining us today and for giving us those tips. Thank you for joining us. We hope you've got some tips. We'll see you very soon. Keep safe and bye.